When it comes to Social Security, understanding the difference between wages and self-employment income is crucial. These two types of earnings are treated differently by the Social Security Administration, and knowing which category your income falls into can affect your benefits, taxes, and reporting requirements. In this video, we'll break down what counts as wages, what counts as self-employment income, and why the distinction matters for your Social Security record. Let's start by clarifying the basic definitions and setting the stage for a deeper dive into each category. Wages are typically the earnings you receive as an employee. If you work for a company or organization and receive a regular paycheck, your income is almost always considered wages. This includes hourly pay, salaries, bonuses, commissions, and even certain types of non-cash compensation. Employers withhold Social Security and Medicare taxes from your wages and report them to the IRS and Social Security Administration. This process ensures your earnings are credited toward your future Social Security benefits. Let's look at some common examples of what counts as wages. Some clear examples of wages include your biweekly paycheck from a retail job, a monthly salary from an office position, or commissions earned as a salesperson. Even tips received in service industries, if reported, count as wages for Social Security purposes. Additionally, certain fringe benefits, like company-provided housing or cars, may also be considered wages if they are taxable. Understanding these examples helps clarify what the Social Security Administration expects you to report as wage income. Not all money you receive from an employer counts as wages. For example, reimbursements for business expenses, certain insurance benefits, and non-taxable fringe benefits are generally not considered wages for Social Security purposes. It's important to distinguish between taxable and non-taxable compensation, as only the former is reported as wages. This distinction can affect your Social Security record and the amount of taxes withheld from your paycheck. Self-employment income is money you earn from running your own business, freelancing, or working as an independent contractor. Unlike wages, there's no employer withholding Social Security taxes for you. Instead, you're responsible for calculating and paying self-employment tax, which covers both the employer and employee portions of Social Security and Medicare. This income is reported differently and has unique implications for your Social Security benefits. If you operate a small business, work as a consultant, or take on freelance gigs, the money you earn is considered self-employment income. This also includes earnings from side hustles, such as driving for a rideshare company or selling handmade goods online. Even if you receive payments through platforms like PayPal or Venmo, this income must be reported as self-employment income if it's for business purposes. Self-employed individuals must pay self-employment tax, which covers both Social Security and Medicare. This tax rate is currently 15.3% of your net earnings from self-employment. Unlike employees, who split these taxes with their employer, self-employed people pay the full amount themselves. You report this income and pay the tax when you file your annual tax return using Schedule SE. This process ensures your self-employment income is credited towards your Social Security benefits. Employees have their wages reported by their employer on a W-2 form, which is sent to both the IRS and Social Security Administration. Self-employed individuals, on the other hand, report their income on a Schedule C and pay self-employment tax using Schedule SE. It's important to use the correct forms to ensure your earnings are properly credited for Social Security purposes. Mistakes in reporting can lead to issues with your future benefits. The distinction between wages and self-employment income matters because it affects how your Social Security taxes are paid and how your earnings are credited towards your future benefits. If you misclassify your income, you might underpay or overpay taxes, or even miss out on Social Security credits. This can impact your eligibility and the amount you receive when you retire or if you become disabled. When you earn wages, your employer withholds Social Security taxes and reports your earnings to the Social Security Administration. These reported wages are used to calculate your Social Security credits, which determine your eligibility for benefits. For 2024, you earn one credit for every $1,640 in wages, up to 4 credits per year. Accumulating enough credits is essential for qualifying for retirement, disability, or survivor benefits. For self-employed individuals, credits are earned based on your net self-employment income reported to the IRS. You must pay self-employment tax on at least $1,640 in net earnings in 2024 to earn 1 credit up to 4 credits per year. The process is similar to employees, but you're responsible for reporting and paying the taxes yourself. These credits count toward your eligibility for Social Security benefits. Most traditional jobs fall under the wages category. This includes positions like teachers, nurses, retail workers, and office staff. If you receive a regular paycheck from an employer who withholds taxes, you're likely earning wages. These jobs provide a straightforward path for Social Security credit accumulation, as employers handle most of the reporting and tax withholding for you. Self-employment covers a wide range of roles, from small business owners and independent consultants to gig economy workers and freelancers. If you invoice clients, set your own hours, and are responsible for your own taxes, you're likely self-employed. This category also includes professionals like real estate agents, artists, and online sellers who operate independently. The line between employee and independent contractor can sometimes be blurry. Employees typically have set schedules, receive benefits, and have taxes withheld by their employer. Independent contractors, on the other hand, control their own work, provide their own tools, and invoice for their services. The IRS and Social Security Administration use specific criteria to determine your status, which affects how your income is classified. The IRS uses several factors to determine whether you're an employee or an independent contractor. These include the level of control your employer has over your work, whether you provide your own tools, and how you're paid. If you're unsure about your status, it's important to review these criteria or consult a tax professional. Misclassification can lead to tax issues and affect your Social Security credits. Social Security credits are the building blocks of your eligibility for benefits. You earn credits based on your reported income, whether from wages or self-employment. For 2024, you need $1,640 in earnings to earn 1 credit, and you can earn up to 4 credits per year. Most benefits require at least 40 credits, so it's important to track your earnings and ensure they're properly reported. Employers are required to report your wages to the Social Security Administration using Form W-2. This form details your total earnings, Social Security and Medicare taxes withheld, and other relevant information. Accurate reporting by your employer is essential for ensuring your earnings are properly credited towards your Social Security record. Always review your W-2 for accuracy each year. Self-employed individuals report their business income and expenses on Schedule C and calculate self-employment tax on Schedule SE. These forms are filed with your annual tax return. It's your responsibility to ensure all income is reported accurately, as mistakes can affect your Social Security credits and future benefits. Keeping detailed records throughout the year can make this process easier. Unlike employees, self-employed individuals often need to pay estimated taxes quarterly. This includes both income tax and self-employment tax. Making timely payments helps you avoid penalties and ensures your Social Security contributions are up to date. The IRS provides online tools and forms to help you calculate and pay these estimated taxes throughout the year. You can review your Social Security earnings record by accessing your Social Security statement online. This statement shows your reported wages and self-employment income, as well as your estimated future benefits. Checking your statement regularly helps ensure your earnings are being reported correctly and allows you to address any discrepancies early. If you notice an error in your Social Security earnings record, it's important to correct it as soon as possible. You may need to provide documentation, such as pay stubs or tax returns, to prove your correct earnings. The Social Security Administration can help you resolve discrepancies, ensuring your future benefits are based on accurate information. Many people have both wage and self-employment income. For example, you might work a regular job and run a side business. In this case, you'll need to report both types of income separately using the appropriate forms. Both sources of income count toward your Social Security credits as long as they're properly reported and taxes are paid. If you're a partner in a business, your share of the partnership's income is generally considered self-employment income. You'll need to report this income and pay self-employment tax even if you don't receive a regular paycheck. Partnerships issue a Schedule K-1 to each partner, detailing their share of income, deductions, and credits for tax reporting. If you own a corporation and pay yourself a salary, that income is considered wages. The corporation must withhold Social Security and Medicare taxes and report your earnings on a W-2. However, any dividends or distributions you receive as a shareholder are not considered wages and are not subject to Social Security tax. Owners of single-member LLCs are generally treated as self-employed for tax purposes. Their business income is reported on Schedule C, and they pay self-employment tax on their net earnings. Multi-member LLCs are usually treated as partnerships, and each member reports their share of income as self-employment income. It's important to understand your LLC's tax classification to report income correctly. Farmers and ranchers are typically considered self-employed, and their net earnings from farming are subject to self-employment tax. This includes income from selling crops, livestock, or other farm product. Accurate record keeping is essential for reporting farm income and expenses and for ensuring proper Social Security credit. If you work as a household employee, such as a nanny or housekeeper, your employer is responsible for withholding and paying Social Security and Medicare taxes on your wages. These jobs are considered wage employment. and your earnings are reported on a W-2. Make sure your employer is following the correct procedures to ensure your earnings are credited properly. Some religious workers, such as ministers, are considered self-employed for Social Security purposes, even if they receive a salary from a church. They must pay self-employment tax on their earnings unless they have an approved exemption. It's important for religious workers to understand their unique tax and reporting responsibilities. Non-cash compensation, such as housing or a company car, may be considered wages if it is taxable. The value of these benefits must be included in your reported income for Social Security purposes. However, some non-cash benefits, like health insurance, are not considered wages if they are non-taxable. Always check the tax status of any non-cash compensation you receive. Tips received as part of your job are considered wages if they are reported to your employer. These tips are subject to Social Security and Medicare taxes, and your employer is responsible for withholding and reporting them. Unreported tips may not count towards your Social Security credits, so it's important to report all tips accurately. Bonuses and commissions paid by your employer are considered wages for Social Security purposes. These amounts are included in your total earnings and are subject to Social Security and Medicare taxes. Make sure any bonuses or commissions you receive are properly reported on your W-2. Fringe benefits, such as health insurance, retirement plan contributions, or employee discounts, may or may not be considered wages. If the benefit is taxable, it must be included in your reported wages. Non-taxable benefits, like employer-provided health insurance, are generally excluded from wage calculations for Social Security. Sick pay provided by your employer is generally considered wages and is subject to Social Security and Medicare taxes. However, payments from a third-party insurer, such as disability insurance, may not be considered wages if the premiums were paid by the employee. It's important to know the source of your sick pay to determine its tax status. Vacation pay is considered wages for Social Security purposes. Whether you receive paid time off or a lump sum payment for unused vacation, these amounts are subject to Social Security and Medicare taxes. Your employer will include vacation pay in your total reported wages on your W-2. Severance pay, or payments received when you leave a job, are considered wages for Social Security purposes. These payments are subject to Social Security and Medicare taxes and must be reported by your employer. Severance pay is included in your total earnings for the year. Deferred compensation, such as contributions to a 401k plan, may be considered wages for Social Security purposes, depending on the plan type. Some contributions are subject to Social Security tax in the year they are earned, while others may be taxed when distributed. It's important to understand how your retirement plan contributions are treated for Social Security reporting. Non-employee compensation, such as payments to independent contractors, is not considered wages. Instead, it is reported as self-employment income and is subject to self-employment tax. Businesses report these payments on Form 1099 NEC, and recipients must include them on their tax return as business income. Rental income is generally not considered wages or self-employment income for Social Security purposes unless you provide substantial services to tenants, such as cleaning or meals. In that case, the income may be subject to self-employment tax. Otherwise, rental income is not credited towards Social Security benefits. Interest, dividends, and capital gains from investments are not considered wages or self-employment income for Social Security purposes. These types of income are not subject to Social Security tax and do not count toward your Social Security credits. Only earned income from work is credited. Alimony and child support payments are not considered wages or self-employment income for Social Security purposes. These payments are not subject to Social Security tax and do not count toward your credits. Only income earned from work is used to determine your Social Security eligibility. Unemployment benefits are not considered wages or self-employment income for Social Security purposes. These benefits are not subject to Social Security tax and do not count toward your credits. Only income from actual work is credited for Social Security eligibility. Workers' compensation payments are not considered wages or self-employment income for Social Security purposes. These payments are not subject to Social Security tax and do not count toward your credits. However, if you return to work while receiving workers' compensation, your new earnings will be credited as usual. Disability benefits from private insurance or government programs are not considered wages or self-employment income for Social Security purposes. These payments are not subject to Social Security tax and do not count toward your credits. Only earned income from work is credited toward Social Security eligibility. To sum up, wages are earnings from employment, where an employer withholds Social Security taxes, while self-employment income comes from running your own business or freelancing, and you pay the taxes yourself. Only earned income from work, whether as wages or self-employment, counts toward your Social Security credits. Understanding these differences ensures you report your income correctly and maximize your future benefits. Understanding what counts as wages versus self-employment income is essential for accurate Social Security reporting and planning. Whether you're an employee, a business owner, or both, make sure you know how your income is classified and reported. This knowledge will help you avoid tax issues, ensure your credits are accurate, and secure the Social Security benefits you've earned for the future.